Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, today I hit my tilt level. I was playing in the markets, and I'll tell you a story about it in a minute, but I'll tell you what, it was like I was on a pinball machine. King wrong, king wrong. It was like another wrong trade, and that was it. After 3 times I get knocked around, I tilt. I went into a tilt today, and I said, no more trading for me. And you know what, traders? I almost deserved what I got today, because one of the things I almost will never do, and you traders know I stick to my guns and I adhere to my rules, I almost will never trade prior to the Fed number. I wait until after the Fed number, and then I sit tight for a while, make an assessment, and then I go. Well, this time around I traded before the Fed number, I traded during the Fed number, I traded after the Fed number, and I lost 3 times in a row, and that was it for me. So I call that my tilt. You know, like when you're playing pinball and you move the machine too much? Well, if I lose 3 times on any given day, I quit trading. So that's what I did. But you know what? Because I broke one of my own rules, it cost me dearly today. It probably cost some of you Omniacs as well. So I'll tell you what, I almost never do break rules, and I won't be breaking them again anytime soon. Speaking of which, another one of the rules which I adhere to all the time is, as we're getting closer to a major holiday and there's a 3-day weekend coming, I stop trading. Traders, I will tell you this, the analysis doesn't work coming into a 3-day weekend, and especially a major worldwide holiday like the one coming up. The analysis doesn't work. The markets do things you don't expect. They go up when they should have went down, and it's just a terrible time for trading. So after tomorrow's trade, I am pretty much done until after this holiday. And hey, a little bit of break time for us here at the Academy, right? I'll take a nice 5-day vacation. It sounds great to me. So, we do have a trade set up for tomorrow. Tomorrow we have 30-year bonds, and we got a red Omni, baby. We think they're going down. I have a nice chart I want to show you on the bonds now. Let me give you some technical reasoning why the bonds should likely drop. Let's go to the charts, traders. I'll be right back to you. Okay, traders, what you're looking at here is the 30-year T-bond daily June bar chart. Look at this right here. We expect that the market has put in a temporary high, if not the highs for now. We have a very classic, textbook classic, rising bearish wedge right here. Markets will usually, after putting in a bearish wedge, will break down through them. At our last Fed meeting, right here, look at the high we put in. And then the market broke. Well, here we are at a Fed meeting, and I think we got the highs nailed here. I think we go down from here. I think we'll come down and possibly test this average. And even though I've drawn up a bit on this chart, it may still show up on top of what I think is a bearish wedge. You very well may have this right now. Shoulder, head, shoulder. Of a huge head and shoulders top, which is what we've seen in the S&P and Dow markets right before the top came, and now we've been in this bear market. So you may be getting some topping action here in the bonds. I think we have a high pegged, and I think we can go lower for a few days here, if not more. If we take out the bottom of this wedge, down we will go. Keep an eye on that chart, traders. Do your own homework and tell me what you think about that. So, you've seen the charts. You see the way I showed you in this thing right behind me. There is very likely a head and shoulders formation up there. It is certainly a textbook rising wedge, which is bearish. And I think this thing could go down. On top of that, you see what happened after the Fed acted last time. We went down. Here we are. We went straight up till Fed day. The Fed acted. Down we should go. With that in mind, for tomorrow, March 19, 2008, Wednesday, we think the 30-year T-bond June contract is going down with our red Omni. In order to capture that, Omni says to go short, sell in the 119.20s, the mid to high 119.20s. You see it, sell it, and expect the bonds to break a little bit. Put your stop in a sensible place. Traders, there is great volatility in these markets, especially now leading up to a holiday. So you're going to have to put a little bit of a thick stop in there. Put your stops in, put them in first. Make sure it's in a place that you're comfortable with. If you don't know where to place your stop, just come on down to the OMNI Trading Academy at www.livewithoscar.com. We will tell you where the stop should go and give you exact entry and exit levels. So if we do get lucky and we get this sell bonds in the 119, mid 1 to high 9, if we do get a chance to sell bonds in the mid to high 119s, we expect them to drop almost as low as the 117.30s. That would be a nice fat trade and maybe a recovery from that little pinball accident we had yesterday. So let's see what happens. Sell them in the mid to high 119.20s. Look for them to drop down to the 117.30s. Get yourselves out, and that would be a great trade if we can get it. So let's see what happens. Traders, as far as the stock market's concerned, don't fall in love with the upside. You may get some upside here. If you do, remember that we're leading into a holiday. Markets will always do opposite of what you expect. Volatility can be great. Volume dries up. So if you do get a rally, don't fall in love with the upside of the S&Ps. I'm not falling in love with the upside of bonds right now either. I think bonds go down. If the S&P rallies next week, I'm sure it'll go right back down again. So don't get caught up in any of these dead cat bounces. The economy hasn't changed yet. Yes, they're lowering rates and making money very cheap and available to big companies that have survived through the stock market route, but they haven't borrowed it yet and they haven't put it to work yet. So it will help the market and the economy, but not tomorrow. It doesn't happen that quickly. So be prepared to have a little more downside route before this thing is over. I don't know how far we'll go in S&P, but I think after this week's rally, if in fact there is one, next week when we all come back to work, down it should go. Let's see what happens. Traders, never trade alone. I tell you this in every video. Make sure you come on down to our site, grab a membership, and come on into the chat room so we can help you learn how to analyze these markets and get it right, because it's not an easy thing to do. Traders, if you'd like, please shoot me out your emails at oscar@futuresanalysts.com. And if you'd like, please give us a phone call. We're here all the time, day and night, every day, every night. There's somebody here. Give us a call at 702-629-4755. All right, traders, I don't know if you're getting another video out of me between now and Easter. Maybe you will. I don't know. You know me. You guys, what do you think? I'll end up with a video anyway, right?
Probably right now.
Maybe you'll see me, maybe you won't, but I'll be at the site and I'll be in those chat rooms on the camera every day, so make sure you come down. Traders, keep your emotions out of trading, and remember, heed my warning here. Markets will do the unexpected in a week leading up to a major holiday, so don't get frustrated if your analysis isn't working, because mine doesn't, no one's does during a week like this. All right, traders, keep your emotions out of trading. One of the best ways I can help you to do that is to say this to yourselves every day, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.